So you've decided to purchase a home. It's an excellent idea. Let's talk some terminology. So when you do a mortgage transaction, whether it's a purchase or a refinance, there are always closing costs. Okay? You've got to get title insurance. You've got to pay for an appraisal. You've got to put enough money into the escrow account to pay the taxes and insurance as they come due in the future. There are always closing costs. Then you have the down payment. The down payment can range from anywhere from 0%, depending on the loan program, to as much as you want. Okay? Now, the closing cost thing is something I really want to talk about. If you've ever heard of a lender talk about a no closing cost loan, what they're doing is they're increasing your interest rate and giving you a lender credit. In the car world, when you're buying a car from a dealership, 0% financing or $5,000 cash rebate. You go to the dealership, you've got to choose one of those two options. If you choose the 0% interest, you do not get the cash rebate. If you choose the $5,000 cash rebate, you do not get 0% interest. Your rate's like 5.9% or something like that. Now, that's not inherently bad. There's no wizardry here. That's how rates work. If you want a rebate or lender credit, you take a higher interest rate. Now, the better way to structure a contract is with seller pay closing costs. Basically, you increase your sales price and include seller pay closing costs, and I've got another video on that. But that's the better route, because if you increase your interest rate to do a lender credit or a no closing cost loan, you're going to pay a higher rate on your loan for the entire life of your loan. That's why it's so important to have a good realtor who knows what they're doing. If you've got a good realtor, hold on to them, give them a high five and a hug. If you'd like to be introduced to one, I'd love to help.